All right, thanks for staying tuned. Welcome back. As we did promise, it wasn't a particularly long break. We're discussing election financing, effects on the economy. Mr. Rwani is just waiting. We'll get back to him in a moment. But, Mr. Booker, I want to ask you this. Anybody listening to what we talked about, the anticipatory spending and all of that that had to do with activities that were scheduled for the first part of the year, the first quarter of the year, and what Mr. Rwani referred to earlier on as the more controlled use of money. One of the sectors that ought to have benefited, I mean, looking at it from the lay point of view, would have been manufacturing. Right. But it didn't, obviously, because from the figures we saw from quarter 4, 2018.
The growth is lame.
That's it.
In fact, it's flat. Manufacturing was flat for Q4. I did a few anecdotal survey. I called not just manufacturers, but printers, just printing professionals.
Who should actually have boomed.
Who, obviously, because we've seen a lot of posters around, right? When the two anecdotal discussions I've had, or the survey, was that, yes, every 4-year cycle, they do more business than normal, every 4-year cycle. This year, however, the margins were tighter, meaning that the customers, in this case, the political parties and the politicians, was efficiently spending their money. 2, the numbers were not as large as it used to be, say 4 years back or 8 years ago. And therefore, it may actually give credence to what Bosun mentioned, which is that somebody is sitting on the keys of the vault and so on and so forth. In addition to that, people are becoming wiser. And so all of those have also conspired in the sense that we've just come out of a recession. Well, not just, but we haven't fully recovered from that. So economic activity generally is slower and is small in size, and therefore spending necessarily have to go to priority areas of families and communities, et cetera, rather than on printing more posters and so on and so forth. And if you have noticed in Lagos, there used to be radio jingles that used to be so frequent 4 years ago, 8 years ago. You don't hear those anymore. And the question then is that it's not coming through in the spending. Now, with the fourth quarter GDP, naturally one would expect the number, the type of number that came out. But I think one of the key areas that we need to pay attention to is that on Friday, the NBS will announce the inflation number for January. I would expect it to be higher than December number. Or,
okay. You think it might be lower?
I think it's lower.
So the inflationary numbers, if the spendings have taken place in January, then it should be higher. Now, if not, then it means that people are still keeping the guns. I mean, the shooting, and the shooting may have started in February. So the discussion is, if it turns out to be even 0.2 or 0.3% higher, then it means that spending really started in January for the elections.
So are you tying the economics to the politics, or the politics?
That's the interrelationship between what is going on in terms of the expenditure or the spending part versus the effect that it may have on inflation.
Right. One thing you must note, though, is in 2014, 2015, the main media, that is channels, newspapers and all that, had a bigger chunk of the advertising spend. What has happened between 2014 and 2019 is that the advent of social media, it's more impactful and it spreads using WhatsApp, using Facebook, using Instagram and all that. It's cheaper.
Right.
So you find that the structure of spend and the impact of spend, I come back to the efficiency of use of the resources.
Utilization of the resources.
Right? And once you are more efficient, the impact is felt immediately.
Right.
And that's why you're not seeing. So the traditional media, who were the beneficiaries of this, and the people who are used to being addressed through the traditional media, are wondering and still looking out for the jingles, looking out for the TV ads, but at the same time,
they are coming.
But they are reaching them on the WhatsApp and all that, and that's, so it's a different structure.
The dynamics of
and that's a lot of efficiency there.
Okay. Bosun, I want to come to you because earlier on, we talked about the stock market. and how political activities were impacting that. I remember having the conversation with you where we talked about, there were a few days back to back. There was the rally in Lagos that resulted in a few deaths. Then after that, there was the issue that came out of one or two other political activities almost taking place one after the other. And the stock market took a dive during that week. And what we came up with, what you said at the time, was that if it continued for the entire week, then it would constitute a trend and that we might then be in real trouble. Because a lot of the investment in the country is from portfolio investors who would take flight if that was sustained. Now, given the situation now, has your view about that changed?
Well, first, talking about the GDP, which Mr. Kerry and Mr. Rwani spoke about, if we look at, and they were right, I think these folks on social media are beginning to eat our lunch. And I think those of us in broadcasting should begin to take that seriously. Because the broadcasting sector GDP went down, not significant in growth in fourth quarter of last year. So I think, rightly said, yes, all the folks who are political, justly for whatever political positions, are taking more to Twitter, they're using more of Facebook and Instagram and what have you, and they are doing less on radio, television, newspapers, and what have you. So that means that the mode of communication is beginning to change. And we're seeing those because it's a lot cheaper for you to spend money there. And again, if you just buy airtime and begin to tweet and begin to send pictures and images of yourself, I'm not too sure that will be easy to track. But if you continue to pay a newspaper, which a full-page color advertise about 700, 800,000, about $1 million, then that leaves some paper trail. But so, anyway, that's another conversation. But broadcasting
that's
GDP.
Trailing now, the issue of trailing the finance.
Yeah, trailing the finance. So folks are getting smart. Maybe they'll start finding another way to begin to track political spending. But go back to the stock market. If you look at the capital importation report we just got a couple of hours ago from MBS, fourth quarter GDP, fourth quarter capital importation very heavy for full year, about 11 billion US dollars. For the fourth quarter, that's for full year 2018, the figure was very robust in terms of portfolio investment in the last quarter of 2018. So international investors, so foreign investors, were not as scared as they were in 2014-2015 period. Naira was stable over several weeks. In fact, today it just went down about 0.01% at the I&E window against the US dollar. The NESD lost very marginally, 0.17%. The stock market lost just about 0.14%. Year to date, we are north of 6%. We're not yet at double digit as you have the Nairobi Securities Exchange, but we're not doing badly so far. So if you look at this time, just about a month ago, we've tried to erase some of the losses we came with in the early part of the year, which was the first weeks of January, because folks are beginning to get more clarity as to who will be the front runners for the presidential election on Saturday. Who are the two main, 20, 30, 40 odd numbers of political parties and folks on the ballot papers, making it very bloody, whatever, messy when you fingerprint it, whatever it is. So it makes it a bit more easier if it's a bit shorter anyway, like a checkbook. But now the key issue is that in terms of investment and foreign direct investment, we're not doing really well. We didn't do really well in fourth quarter. But for portfolio investment into equities, into bonds, into other financial instruments and what have you, we're doing very well. And that means that we didn't see that massive capital outflow that we saw in 2014, 2015. And towards the end of last year and towards the end of the year, clarity begins. Okay, fine, you're likely going to have two main challenges. None of them are lightweight. They are both heavyweights in their respective positions. So that gives the market a bit of a confidence. Then the central banks seem to have maintained a very tight lead on liquidity. They were steady with the market. This week, last week, we saw single-digit yield on short-dated treasury bills. We never believed that will happen. Look at the Eurobond, and I said it on Monday. Our Eurobond pricing has not been really wacky, and the yields have not been significantly higher. I think last week, just about 0.1% uptick in all Nigeria's benchmark Eurobonds that are listed abroad. That shows that the confidence is there. As Mr. Rwani says, Mr. Kerry said, look, Nigeria will not come to an end on February 16th. Tomorrow is the Valentine's Day, the 14th. The market is showing some love. That is very good. We hope the politicians will show some love on the 16th and beyond.
But thank you for reminding us about Valentine's Day, even though we have so many hard issues that are occupying our minds
are there to talk about
at the moment. Yeah, and Mr. Dichola is still in Abuja. I want to throw it back to them.